Hi, and welcome to a brand new episode of ET Commodity Talk, where every Monday we discuss about precious metals and commodities only on ET Markets live stream. I'm Neha Vashisht Mahajan, and today I'm joined by Anindya Banerjee. He's the Senior VP, Head of Research, Currency, Commodity, and Interest Rates at Kotak Securities. Thank you so much, Anindya, for taking out time and joining us today.
Thank you for having me.
All right, so let's now come to Diwali also. Samvat 2081 is near. So, what is the outlook for gold and silver both ahead of Diwali and Dhanteras?
Right. Our expectation is that we should have a back-to-back positive year in gold and silver. So
Hmm.
we are expecting, if I take the MCX levels, which is currently around 78,000, we expect it to be around 87 to 88,000. Could even happen 90,000 over the
Hmm.
next 12 months. For silver, the gains could be much more. From currently around 96,000, we could see levels of 1 lakh 30 or even 1 lakh 35 per kilo on the
Okay.
MCX over the next 12 months.
All right. So let's also come to different ways to buy gold and silver in today's time. So, what are the different ways investors can look at buying gold and silver at this point? What are your thoughts on that?
Sure. See, it depends on the objective of the individual. For example, if somebody is a speculator, which means they want to make some short-term gains or short-term trade, then of course the MCX is the avenue to do it. It's much more cleaner
Hmm.
and much more efficient. If somebody is an investor, which a lot of the people are, in that case, they have several options. Let's take the gold, for example. We have the ETF. We also have the sovereign gold funds. We also
Hmm.
have the physical gold, and finally, we have the MCX futures. Now, each
Yeah.
one has its advantage and disadvantage. The basic difference between using the MCX is in MCX you don't have to put upfront the 100% of the funds because it's a
Hmm.
margin product. So that is the biggest advantage, and that may help you depending on how much is the forward roll to make some additional gains because of the amount of interest income which can come on the margin which has been not utilized. So this is the
Hmm.
goal. In silver, we also have the physical ETF and futures. Now it depends on the somebody's objective, but these are the overall avenues through which one can invest in gold and silver.
All right. So, just wanted to ask one more thing to you that whenever we talk about investments and we talk about precious metals, a lot of people go for gold only, but there's a lot of talk about silver also. So, should
Right.
investors go for silver instead of gold when they're investing, and what would be more beneficial considering the different risk factors involved in it?
See, it depends on somebody's risk appetite. But let's
Hmm.
assume that if somebody has a high risk appetite or a high volatility tolerance, in that sense,
Yeah.
we would suggest it is better to be in silver overweight.
Okay.
It's not that completely ignore gold. Be overweight on silver than gold. For the simple reason, silver is an interplay of both gold and industrial metals, which means you will
Hmm.
get two themes with one particular investment. So that's the reason why we expect the silver to outperform gold over the next 12 to 18 months. So it makes sense to
Okay.
be a little overweight on silver.
So, if someone wants to not go for, say, physical silver, what are the different avenues? How can they invest easily through apps, or what are the avenues out there to invest in silver, and what are the safer ones?
Right. See, the we now have a lot of financial options to take exposure in silver. So, for example, the ETFs are here and they are quite liquid. So you can look at
Hmm.
various silver ETFs on the stock exchanges, and
Hmm.
additionally, one can also look at the MCX silver futures. But again, one have to understand the basic difference. In an ETF, it's like a cash investments. You just have to put your money and buy it like a cash stock and hold it. For in a futures, you have to be aware of its margining and mark to market. So one should not over leverage. That's the biggest danger in futures. But if somebody is not over leveraging, then futures can help you to augment your returns because, as I
Hmm.
said at the that you are putting in just the margin, let's say 15-20% of the capital as margin on the exchange, and the rest 80 to 85% can stay on your bank or on a liquid fund and augment your overall returns.
Okay. Anindya, one more thing I wanted to ask is whenever I talk to anyone from commodities, they always say that keep 10 to 15% of gold in your portfolio as a hedge. So if we're talking about silver, what is the ideal percentage for say an investor who is not that risk averse, or in comparison to different risk factors that are involved?
Right. See, 10 to, if I take the overall 15% as the allocation into precious metals, gold and silver, I would suggest,
Hmm.
because I said that it is better to be a little overweight on silver than gold. So have
Okay.
out of that 15% of the overall portfolio, if I take that pie, have a 60% to silver and 40% to gold.